Ladies and gentlemen, good day and welcome to the SMC Global Securities Limited's Q4 and FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you. Good morning, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of SMC Global Securities Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the fourth quarter and financial year ended 2022. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Subhash Agarwal, Chairman and Managing Director, Mr. Mahesh Gupta, Vice Chairman and Managing Director, Mr. Ajay Garg, Director and CEO, Mr. Himanshu Gupta, Director and CEO of Moneywise Financial Services Private Limited and Director of SMC Global Securities Limited and SMC Comtrade Limited, Mr. D.K. Agarwal, Chairman Managing Director of SMC Investments and Advisors Limited, Mr. Anurag Bansal, Director of SMC Global Securities Limited and Director of SMC Capitals Limited, Mr. Pranay Agarwal, Director and CEO of Moneywise Finvest Limited, and Mr. Vinod Kumar Jamar, President and Group Chief Financial Officer. Now, without any further delay, I request Mr. Subhash Agarwal to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj, and good morning, everyone. It's a pleasure to welcome you to the earnings conference call for the fourth quarter and financial year ending 2022. Firstly, I hope that everyone is keeping safe and well. Let me start by giving some background about our company for the sake of those who are joining this call for the first time, so to bring everybody on the same page. SMC Global Securities Limited was established in 1994 by myself and Mr. Mahesh Gupta, who is the current Vice Chairman and Managing Director. Over the years, the company has grown into a diversified financial services company offering a wide spectrum of services like brokerage, investment banking, wealth management, distribution of financial products, financing, insurance broking, clearing and depository services, fixed income securities, financial advisory services to corporates, institutions, high net worth individuals and other retail clients. We have a strong network of more than 2,500 sub-brokers and authorized persons spreading across 455 cities in India, thereby servicing approximately 20 lakh unique clients. Over the years, we have also launched various innovative digital technology-enabled capabilities to offer best-in-class products and services. We launched our discount broking arm in 2019 under the brand name of Stockcard, which is a first of its kind platform in the broking industry where customers are charged only for the profitable transactions, and I am happy to say that this platform has been seeing a very encouraging response. The company is governed by a strong board including 6 independent directors of high standing and is run by a highly qualified and experienced management team. We have had a consistent growth track record and are well positioned for continued growth in the coming years with our established presence, track record and by embracing the latest technology. I now hand over to Mr. Vinod Jamar, our Group CFO, to take you through the fourth quarter and full financial year 2022.
Thank you. Thank you, Subhash sir. Good morning, everyone. Talking about the financial performance of Q4 FY22 of our company on a consolidated basis. The operating income for the quarter was INR 286 crores, an increase of 9% year-on-year. Operating EBITDA was reported at approximately INR 69 crores, an increase of approximately 20% year-on-year, and the EBITDA margin stood at 24.08%. Net profit after tax reported was INR 41 crores, while the PAT margins were 14.3%. For the financial year ended 2020, the operating income was INR 1106 crores, an increase of approximately 23% year-on-year. Operating EBITDA reported was approximately INR 285 crores, an increase of approximately 46% year-on-year, and the EBITDA margin stood at 25.72%. Net profit after tax was reported at approximately INR 175 crores, an increase of 66% year-on-year, while the PAT margin percentage was 15.78%. Let me now take you through the quarterly segmental performance on a consolidated basis for the fourth quarter. In the broking, distribution and trading segment, the revenue for the quarter was INR 189 crores, an increase of approximately 6% compared to the same period last year. The EBIT for the segment was INR 47 crores, which has increased from INR 45 crores on a year-on-year basis. Revenue and EBIT have increased consistently on quarter-on-quarter basis. Coming to the insurance division, the revenue for the quarter recorded was INR 78 crores, which increased by 5.82% on a year-on-year basis. The EBIT was INR 3.6 crores, which increased by approximately 64% year-on-year. Revenue and EBIT have decreased slightly Q-on-Q due to seasonal impact, as in the last quarter there was an uptick in vehicle sales in the festive season, resulting in higher motor insurance commission. Lastly, in the financing division, the revenue for the quarter was INR 29 crores, an increase of about 24% on year-on-year basis. The EBIT for the quarter was approximately INR 17.4 crores, an increase of 135% on year-on-year basis. Revenue and EBIT have increased QOQ due to increase in loan book size to approximately INR 686 crores as of March 22 from about 541 crores as of December 21. GNPA and NNPA stood at 2.84% and 1.99% respectively, which is comparable to the industry standards and a significant improvement over last 2 years. Lastly, the company has proposed a final dividend at 60% apart from interim dividend of 60%, making it to 120% overall dividend. The board has also approved a buyback of shares worth INR 75 crores through open market purchase to reward our shareholders even further. With this, we can now open the floor for the questions and answers session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sanket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar sir, and thank you for this opportunity. Sir, firstly, sir, on the if you could explain further on the nature of the fee and commission income, sir, and how should one look forward on an annualized basis? I mean, what factors will contribute to the continuity of these numbers?
So the fee and commission income consists of mainly brokerage on equity, commodity and currency markets, distribution of financial products. These are two major, plus we have our own proprietary desk that also, this proprietary desk is separately. Commission income consists of these two things.
Okay, so that is totally market dependent, sir. As the equity market and the commodity market behave, it is directly proportional to the volume of business there.
Agree. Market fluctuations affect it, but since the cake size is increasing. Even when the market is down, our trading volumes are not affected disproportionately. There could be slight difference, but it is always there.
Jamarji as well said, cake size is increasing, and you have seen recently many accounts, more accounts have opened, which has never opened so many number. So this is awareness in general in India, it is increasing. So that possibility we can't foresee that whether market go up and down. I think investors are increasing. So also brokerage and fees income will always increase.
Right, sir. And sir, if we consider the line item interest income, and then we come to the finance cost, if you could explain the nature of these two items, how are these two derived, and on what basis?
Interest income consists of a fixed deposit income placed with the banks for taking bank guarantees to be placed with exchanges. This is number one. Number two, we allow the certain of our customers to utilize the payment obligation, delay the payment obligation, and we charge them interest, which we call delay payment charges, and margin trading funding. So our interest income has increased substantially. Right?
Hello.
And NBFC is the main factor which is contributing to the interest income.
I missed the last point.
We have our NBFC arm, which has a loan book of around 686 crores. So interest income is coming from that also.
Okay. So what is the coupon rate, sir? The blended coupon rate the NBFC charges?
This is Himanshu. I can answer this question. So we have multiple product lines, and our blended yield on the book is close to 15%, and product-wise it ranges percent, and it can go up to about 19%. On an average, we fetch 15.5.
15.5%. Correct, sir. And for the finance cost part, sir, how does this line item work?
Yeah, if we talk about NBFC particularly, our average borrowing cost is about 9 quarter. We are a A- rated entity from KRA and ICRA, and we believe our borrowing cost is, I think, much lower if we compare it to the other NBFCs of similar size and similar rating.
Sir, out of this loan business, how much is the net self-owned fund of the company, and how much is being the arbitrage, if I may use correctly, that is borrowed from the market and then lend at a higher rate?
Understood. So, as Jamarji just told, our closing loan book is 686 crores, and that is funded by about 360 crores of equity and about 355 crores of the borrowing, external borrowing. And that borrowing, in borrowing we have a diversified borrowing profile constituting about 15 lenders and 4 tranches of NCDs.
More tranches of?
NCDs. No.
NCDs.
Debentures.
Okay, sir. And lastly, Jamar sir, for this buyback part, in this buyback, sir, do the promoters have an inclination to participate?
No, actually promoters are not participating in the buyback. We don't intend to, and also in open market route, promoters are not permitted to participate.
Permitted also, right, sir. Sir, but if we just slight a minute, I'll take, sir. If we took the tender route methodology, then your investors would not have been taxed, and only 20% which would have been paid by the company would have sufficed the taxation part, and given an opportunity for the investors and arbitrage also to participate in the buyback part. Herein you are buying from the market, you are paying 20% buyback tax, but the person who are selling on the other side are also paying taxes.
Understood your question. So basically, as far as taxation is concerned, we are still evaluating the taxability on the shareholder front. But we are going through the circulars dated March 21 and April 21 of NSE and BSE, wherein we have come to know they have set up a mechanism to inform to the respective shareholder whose shares are matched with the company buyback transaction. So there is a circular to that effect, and once the shareholder receives that intimation from exchange, he can keep that as a record and use it to claim the exemption under the Income Tax Act. So that is the circular that is there. Even in the public announcement made today in the newspaper, we have referred to that circular. We are still evaluating the practical the procedures, how the communication would go to the investors. So we can maybe once we have more clarification, we can get back to you.
Okay, sir. So things can be worked out that the investors, as per the circular, won't be having any tax incidence while participating in the buyback.
That is the intention of that the procedure laid down by NSE BSE. But we need to further check it how the exchanges are sending their communication.
And sir, secondly, sir, the investors won't know when are you buying from the market. It is a continuous trading process. So how come I know, sir, that it is the buyer on the side is whether the company itself or somebody else?
Sure. So basically the issue would open from May 20th and it will continue for a period of 6 months. You are rightly said the company has discretion to buy any particular day or not to buy. But again, what we have got to know, there is a mechanism in the order book that there is a star which appears in the order book when company places the order. Still again, we are evaluating and checking it further with the stock exchanges. We can get back to you on both the aspects. And further, at the end of the day, the merchant banker would report to the stock exchange about the transactions done by the company under buyback program.
Right. And lastly, sir, on the employee benefit expenses, sir, how should one look at this line item in proportionate to your income profile, sir? It has grown from 30 crore to 35 crore on an year-on-year basis, and also for a quarter-on-quarter basis that has gone well. So how much is the fixed cost? What is the variable part of this line item?
The employee cost is largely fixed cost, and when the volume increases, the employee cost also increases. But our revenue grows at a faster rate while these costs are not growing at that rate. So if revenue grows 23%, expense grows at say 17-18%. So that adds to our bottom line.
Right. And anything in particular for the other expense line items, sir? That has also been at 11-12 crore now. Earlier it was 7-8 crore. So anything in particular about it, or will this line item remain in this vicinity only?
Are you talking of standalone numbers or consolidated?
No, sir. Yes, I'm referring to the standalone numbers only. I must go to this consolidated one. Sorry.
Okay. So other expense also tend to increase when the volume increases. And you see, last year there was COVID. Due to COVID, offices were closed, so there were certain savings in administrative costs. But now we have come to the regular full office working, so slightly these expenses have increased.
Right, sir. And we also made one real estate investment, sir, of late. If you could dwell more, sir, what was the purpose of this, and how is the company going to benefit out of this investment?
I think Mr. Kapoor, what's your name? Sankit Kapoor.
I am Saket Kapoor from Kolkata, sir.
Yeah. Sankit, yes, SMC has taken a land in Mohan Cooperative area. So basically, we want to build a SMC house. As we are scattered in many offices, as we were expanding over the years, so we were taking places wherever it is available, and so there are many offices in Delhi. So we want to consolidate it, and so that our working efficiency should increase. So therefore, we have taken that piece of land. It's a big land, and we are going to construct the office there.
Right, sir. And what would be the further investment that will go into through and when it will get commercialized, sir, the offices and the savings, sir, which you are working out currently, if any?
And moreover, we will save in rent, and we are expecting, we have approved total expenditure around 75 crore for construction and furnishing and for all these activities. So, and definitely we are paying huge rent in Delhi, taking various offices. So that will be a great saving. Okay,
sir. So do we have the rent number readily with you, sir, on an annual basis? What is the rent paid by us?
It is around 12 crores.
12? So 12 crore is the total rent which we are paying on the company behalf. But the saving, we have to understand how much saving will remain, because due to expansion, certain space we have to keep. Over the period, we have also expanded. So maybe 5 to 8 crore rupees can be the saving of annual rental value.
Right. And where is the location, sir? I missed the point when you were explaining. Where will be the office?
It is in Delhi itself. Have you seen Apollo Hospital? Sarita Vihar?
No.
Yeah. So it is in South Delhi towards Faridabad.
Right.
Yeah.
Yes, sir. Thank you, sir. I'll come in the queue for my follow-up.
Okay. Thank you very much, Sanket.
Thank you, sir.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Manav Kapasi, an individual investor. Please go ahead.
Thank you for the opportunity, and first of all, congratulations on a great set of numbers. And I also would like to thank the management for doing a buyback along with the dividend payout. You know, it is a very encouraging sign. So my first question is on your NBFC business, and there is an encouraging turnaround here on the parameter. So what is the outlook for FY23? Where do you see the AUM and loan book growth at, and what do you think would be able to cross the 1,000 crore AUM level? When do you think you'll be able to cross? And also, what is the outlook on the GNPA levels by the end of this year?
Okay, so thank you for your question. So we would definitely wish to achieve the number that you just talked about, having the closing loan book of 1,000 crores. This we closed at about 686 crores. Given the current run rate, last year we in the last quarter we made a disbursement of close to 215 crores. So we would definitely be exceeding the run rate that we achieved in the last quarter. But we have a fast amortizing book also, wherein we have a collection of close to 350 to 400 crores on annualized basis on the existing book. So the plan is to close about 1,000 crore by the year end. Not sure whether we would cross 1,000 or not. Secondly, given the outlook of the quality of the loan book, we have witnessed like a fast recovery in the delinquent portfolio post the COVID. So as you can also see in the numbers, the closing GNPA for the year ended is about 2.84%, as against 6.17% at the end of last year, and our collection efficiencies are also close to 99%. We have seen strong recoveries in our delinquent portfolio, so we see that the GNPA numbers to be maybe close somewhere we are sitting today. And we had expanded in additional geographies over the last 2 quarters, so that geographies have started yielding business now. So that that is the plan going forward to expand the retail book through the geographies. And we have made adequate provisions on our book, so we don't see maybe any major credit costs going forward.
Okay, thank you. And just a follow-up on that, what was the NIMs for Q4?
Okay, so I told earlier, our gross yield on the book is about 15.5%, and our borrowing is at about 9 quarters. So we are making a gross margin of about 5.5%.
Okay,
For
okay. And
operational expenses and credit cost.
okay, and coming to stocks cart, what would be the contribution of revenues from it in FY22? And also, has it reached break-even levels, or what were the losses on it in FY22?
Yeah, so basically, in terms of revenue, we have increased the revenue 70% year on year, and I'm very happy to inform that in the last quarter we achieved the break-even figure, and we hope to continue on this trend going forward. We hope to increase our revenue substantially and keep the break-even trend going on, and that is, I think, a good trend we are seeing in the market of growing number of clients, and StockCart is poised to gain with that.
Okay, and can you quantify the revenues for FY22? What exactly was the amount?
14.85 crores. In terms of revenue, we have achieved around 14.85 crores in FY21-22.
And on the losses end?
On losses, it's a loss of 50 lakh rupees, which was majorly in the first 9 months.
Okay. Thank you so much. All the best to the team.
Yeah, thank you.
Thank you. The next question is from the line of Santosh Kumar, an individual investor. Please go ahead.
Thank you for the opportunity for asking a question here. A quick question on the pledging of shares. Looks like we created a pledge of 40 lakh shares last month. Can you let us know the more details about the purpose of it?
One of the promoter company, they have pledged the shares for trading purposes, and partly they have given to as a collateral for taking borrowing for SMC group. So that is why we have pledged.
Borrowing for like operating cash flows or like?
Yeah, no, it's a normal working capital loan borrowing from for SMC Global Securities Limited. So they have provided additional collateral.
Okay, thank you.
So.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Pratik Rathi from Choice Equity. Please go ahead.
Congratulations.
I'm sorry to interrupt you, Mr. Rathi, but there is a lot of disturbance from your line.
Is it audible now?
Yes, please go ahead, sir.
So congratulations team on the good set of results. So I just wanted to know, so there was an entry of say 50 to 52 crores of a land purchase in Delhi area. So I just wanted to know some more details about this, like what was the purpose of this acquisition of land?
Mr. Pradeep Rathi, just now I have explained that we have purchased this land for our office, head office. And since we are scattered in various offices in Delhi and we are paying rent, so to save rent and we buy the piece of land so we can have big office there.
Okay, thank you. And one for congratulations and thanks for the great initiative of doing a buyback. I think the company share prices have been hovering below the IPO price for quite some time. So thanks for this initiative of proposing a buyback. Thank you.
Thank you, Pradeep Rathi.
Yep.
Thank you. The next question is from the line of Devarsh Mehta, an individual investor. Please go ahead.
Yeah, hi, good morning. Great set of numbers. So I had a question on the insurance sales part. So insurance sales seems to be at a plateau for a long period of time. So growth here is flat. So what is the strategy to grow it?
So hi, I'm Maruk over here from SMC Insurance Broking. So regarding the growth of the insurance, yes, there is a slight observation which you are right. But over here, what we are looking at is that we are revamping our entire IT platform, and we are confident to expand the IT insurance business. We are focusing on two teams basically to penetrate into tier 3 and tier 4 cities, and focusing on high margin insurance products. So besides strengthening our IT capabilities and IT platforms, complete revamp, we are focusing on our sales channel and also on the insurance product mediation as well.
Okay, fair enough. And could you brief us on what is the growth outlook on the top line and the bottom line for FY23? And do we expect 15 to 20% growth or more, considering that the markets are now in a bearish zone and we also have a large proprietary?
Or consolidated?
Consolidated.
Okay. Actually, our revenue, as we told you in 22-23, our revenue increased by 22.8% on year-to-year basis, consolidated basis. Our EBITDA margin has increased from 22.5% to 27%. That margin has increased to 15.8% from 11.7%. EPS, our increase from 9.28% to 15.43%. And in the same way, our book value has increased from 68.30 to 81.86%. And so we are expecting good growth should remain continue. Time to time, we have improved our IT infrastructure. We are still hiring recently we have hired a CTO, and we are increasing our IT team also. So we are improving our IT infrastructure in back office, front office, everywhere, and we are very confident that growth will continue in time to come, and we will put good numbers.
Okay. So just to come back, but considering bearish markets, do you think you can continue this growth? If so, how will this be possible going ahead?
So you see, market is always volatile. Sometimes it is bullish, sometimes it is bearish, and all time this is good. And I think this is basically when market is bearish, it give a opportunity for long-term investors to invest in the market. Or moreover, the number of investors is increasing on day-by-day basis, and we have seen very good number increasing in last 2 years, COVID time. And our cake size of investors pool is still small in comparison to developed cities. Still we are at 5%, 6% of the population, and it can grow up to 25% of the population. So we are having a great future for capital market as well as financial market.
Okay. And what has caused the other income to more than double from FY21 to FY22?
It is basically due to an NBFC that Mr. Himanshu will tell.
Yeah. Hi, good morning. So basically in NBFC, we have been time to time investing in certain fixed income securities and certain short-term opportunities as part of our regular fund management, because our majority of the borrowing is in the form of term loans, and to have a better planning over the inflows and outflows of the fund. So any surplus fund we keep on investing, and that is basically treasury income primarily, and there are certain other incomes which are not material.
Okay. That's all from my side. Thank you.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, thank you, sir. Sir, for the net interest margin of say 500 basis points, sir, how sustainable are these number when your book size grows? These are extraordinary high margins, sir, 5%. So, what is your understanding on the same? Today, on a relatively smaller book, if I may use the term, it is, although 600 crore is a high book size, but still you are maintaining 5% margin. If we take the averages of the other NBFCs, are they all aligned to these margins only, or your take on the same, sir?
Okay. So basically all NBFCs operate at that kind of gross margin. I think if you compare the banks and NBFCs, banks are lending at a relatively lower rate and have a lower cost of capital, and their gross margin is also lower. But NBFC typically operate at a higher margin given the customer segment they operate in, the products that they offer to their customer. And because NBFCs have a far deeper the delivery reach, so their OPEX cost is little higher than as compared to the bank, and that's why the NBFCs enjoy a higher gross margin. So that is, I think, standard, and it will continue even on a larger book. In fact, as the loan book would grow, we would have a lower OPEX cost that we foresee and plan to have a lower OPEX on the larger loan base.
Right. And on the NPA and the delinquency front, sir, what is our business plan? How do we control those delinquencies and the NPAs going higher since the margins are higher? So what is the security coverage? Generally, we go through the different segments, just like loan against property, then commercial vehicle loan and other aspects.
Okay, so basically, first of all, the security coverage depends on the product that we offer, and it is pretty much in line with the industry and the other lenders are offering. For example, in loan against property, the loan to value ratio ranges from 40 to 60% depending on the occupation and the nature of the property. And we are not into commercial vehicles, that you were just asking. We do provide equipment finance against medical equipment, and there the LTV ranges from 80 to 85%. And when it comes to loan against shares, it is up to 50%, and on an average it is close to 40-45% LTV. And that is in line with the industry. And it's not only about the security cover. We have a strong underwriting mechanism, very detailed credit policies and procedures that mitigate risk in the entire lending process. And on the top of it, the collection team and the litigation mechanism is also strong to have better collection over the delinquent loan. So I think it is the overall checks and balances at every point of the business that we have built.
So going forward, this will form a core part of our the business model. We would like to grow this aspect of the business along with the other fee-based income and things.
Mr. Ajay Garg, you should answer because our major income is coming from fees income, broking and all that. So over to Mr. Ajay.
Yeah, would you please repeat the question?
Sir, I have asked that will this part of the NBFC business will form a core, will contribute to the core business, or what is our outlook going forward? Since its contribution currently is lower, but what is the thought process? It will form a core part of the business? Will be a core to the business, or will be an ancillary the way it is continuing today?
Okay, Sanket, you are asking from NBFC point of view or consolidated?
Yes, sir. Yes, sir. Yes.
NBFC. Okay.
Yes, sir.
So Mr. Himanshu will answer.
So basically, if you see, we operate in primarily three segments as a group, which is broking, trading and distribution, the financing business and insurance business. As of now, the NBFC business constitutes about close to 10% of the top line of the group. Going forward, as we grow our book size, as you will notice, our equity in the NBFC is close to 360 crores, and we are just sitting on a debt to equity of 1:1. whereas the other NBFCs typically operate at a leverage of 3.5 to 4 times on an average. So we see there is a great potential to grow on our existing equity base as well. We were a little conservative over the last few years, and we actually grew very slow over the years. And now we see that the business will contribute maybe higher share in the overall goods business. It's very difficult to put in any number, but yeah, it will form a considerable part of the goods business.
Right. Okay, sir. Thank you, sir. We'll wait for the clarification on the buyback part, sir. As and when the same, you kindly inform through the stock exchanges so that investors at large would be benefited from the same.
So I am not sure whether we have to report that to the stock exchange.
No, sir. I was just looking. Trying to make sense. How will the investor be benefited out of it? If it is feasible for the management and it is brought to our notice, it would be really grateful, sir.
So if you
I know that.
Share your contact, we can get back to you after
yes.
getting the information.
Yes, sir. I will do that.
Thank you. The next question is from the line of Vaibhav Kacholia from VK Capital. Please go ahead.
Hi, sir. I wanted to know, sir, long term, what are the plans of the company? Can we ever reach a ROE of like 20% and all? And if yes, what is the game plan for that?
ROE 18%. 18, yes. Yeah, ROE already we are having 18% plus percent. So we can.
So our net worth is around 1,000 crores and 100 crores of profit, right?
175 crore profit on consolidated basis. So we have ROE more than 18%.
Okay. And sir, this NBFC part of the business, what is the kind of model we are trying to emulate? Very few people have been very successful. Do you see any benchmarks? Like, what are the success stories which you think you can emulate?
Okay, yeah, Himanshu this side. So our strategy is to focus on the retail lending front, and we are very conservative as far as the credit policies and practices are concerned. So I don't know like what you are comparing to, but overall I think NBFCs have a good market share and a good reach as far as the retail lending is concerned. We are currently operating primarily in the SME lending, wherein we lend to SMEs against property for purchase of medical equipment and unsecured loans also. And right now we have close to 30,000 customer base, which is a very well diversified. And we are also diversified in terms of geographies. Like as of now, we operate in about 5 states, and within those states also we have reach in multiple cities. So the book is very well diversified. The processes are well defined, and the underwriting is completely centralized. We are not into the retail fintech loans, which are application based loans. So there we see like little issue in terms of the delinquency or the operational cost being too high and not the business being not viable. So we tend to operate only in the profitable segments.
Like sir, my question was, is there any NBFC of our scale or where we aspire to reach, which you have seen, which has had great success? In general, NBFCs have not created too much wealth for investors as yet.
So it is very difficult to name any NBFC per se, but yeah, we have a good business plan, and we see multi-fold growth in times to come.
Okay, got that. And sir, with interest rates rising, don't you think people who are borrowing money at 15-16%, there is an inherent risk?
Okay, so basically we have an interest rate policy wherein we try to mitigate this risk. For example, our longer term loans are priced at a variable rate basis. So there, as the interest rate will go up, which is expected, so our rates on the existing loans will also reset. on periodic basis. And as far as short-term loans are concerned, there the interest rate is fixed, but since the tenure is short, so we don't have much risk on the short-term book.
Okay, got that. Thank you.
Thank you. Before we take the next question, reminder to the participants, to ask a question, you may press star and 1. The next question is from the line of Santosh Kumar, an individual investor. Please go ahead.
Thank you. Sir, if we come to our broking business here, how do you position our broking business compared to your peers or competitors, like let's say Angel One or 5paisa or the big one, the Zerodha? How do you position your broking business, and how do we differentiate from them?
Yeah, Mr. Santosh, Ajay this side. So ideally, we are a full broking house and growing year-on-year basis. Last year, our revenue grew more than 24.5%, and the PBT grew more than 54%. And in 2019, we started in competition with Zerodha and Angel One, all the discount brokerage houses. We have started a separate discount brokerage house by the name of StockScart. So we have already crossed more than 1 lakh account out there, and we do have a very big plan. So we are improving our technologies, and very soon we will be coming out with various social media campaigns and marketing activities. Would try to capture the market in the same line.
Okay, thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. In our last conversation also, sir, you did spoke about the proprietary decks, and sir, if you could give us some more color, what are the components of your proprietary decks? How are you positioned in the market in terms of the hedged and unhedged position? And sir, if you could give us some more color, what is your outlook on the volatility that is there in the market? What is your take currently, sir?
Proprietary trading we do arbitrage and high frequency trade, and we are doing for last so many years. So we have a dedicated team of around 400 persons, traders, and we are doing well.
Any color on the size of the book, sir? What are the do we have unhedged position also in the proprietary decks, or everything is closed and we have
our entire strategy is almost hedged. We trade on different strategies, and these are all hedged. So we don't keep unhedged position.
And what is the at any point of time, what is the size of the book, sir?
Size of the book, you can say we have deployed around 200 to 300 crore in this business.
So at any point of time, we have a total hedge position of around 300 crore.
Yeah, you see, this proprietary business is working as a you can see whenever we need for operations, we can reduce our size book, and when we have idle fund, we increase our size. So it is just like a treasury also. So keeping 100 to 200 on permanent basis, and rest you can say that is fluctuating money, which we at times we introduce and at times we grow.
But sir, to earn 45 crore on a quarterly basis, I think the quantum of money and the position involved should be significantly higher. You are earning about 15 crore rupees a month. If it is not linear, I know that in stock market earnings are not linear, but still a quarterly income of 45 crore do envisage a lot of capital deployment, or depending upon how are you making this money, creating this wealth? That was my question.
Finally, this 45 crore includes the broking and distribution as well.
But sir, that is in the fee and commission business, I think.
Yeah, it includes the commission business.
No, fee and commission is a separate line item, and sir, I thought.
Yes, let me explain. This is a gross income. Then there are certain expenses associated with it. So 55 crores is 45 crores a quarter is not the profit before tax. It's gross revenue. Then there are expenses associated with it.
It is a revenue. It includes STT, etc. And that also included. So there are certain expenses which is to be directly now. Staff cost and moreover so many expenses. That is a revenue you are talking.
Okay. Right, sir. Thank you, sir, for that.
Thank you, Saket. You are showing good interest. Very good. Yes. Thank you very much.
Thank you, sir, for this. I'm humbled, sir. Thank you.
Thank you. The next question is from the line of Vaibhav Kacholia from VK Capital. Please go ahead.
So in the online business part, I wanted to understand what is our customer acquisition cost per customer or something, and what would be the revenue we would generate from this customer?
Yeah, so basically the customer acquisition cost is ranging between 3 to 4,000, and our ARPU is around 10 to 12,000
per annum.
Per annum.
Okay, right now we've shown 15 crores of revenue for 1 lakh customers, so that is around 1,500 rupees. This would be for part of the period, is it?
I think I think basically your question is about stock card.
Yeah.
Discount broking arm. So that figure is slightly different. You can say in ARPU terms, we are on around 5,000 rupees per year, per annum. And client acquisition cost would be around 1,000 to 1,500. So basically, we are maintaining a healthy ARPU. Our strategy in the market has been a little different. It is bottom line approach. And so you can see it in our ARPU, which is, I think, higher than the industry.
Okay. So how many customers are we looking to acquire over the next 1 or 2 years, sir?
In terms of number of customers, I think this year of 22-23 is our transformation year, as already spoken by some of my colleagues, that it is a transformation year. We are heavily investing in the technology, and we are going on end-to-end IT infrastructure revamp. So this year we are planning to maybe double our number of clients, and from maybe in next 2 to 3 years we'll be having we can even grow it multifold. It can be around 5 to 6 times in next 2 to 3 years.
Okay, so this will be basically by online marketing?
Yeah, basically by online marketing. We have tied up with lot of influencers in the market, and we plan to grow through them. And also we are heavily investing in the digital marketing infrastructure.
So if we have to acquire 1 lakh customers this year and 1,000 rupees per customer, so our budget will be 10-15 crores for that digital marketing costing, is it?
You are right.
Okay. And so in this proprietary trading, I wanted to understand what is the profit level on this investment of 200 to 300 crores?
Say again.
In the proprietary trading desk,
Yeah.
what is our net income, pre-tax or post-tax, on this revenue of 50 crores per quarter, whatever?
Yeah, so in past we have generated around 15% profit on the capital investment.
So like after all expenses, it would be, this is after tax, sir, so after all expenses, it would be 40 to 50 crores net profit, is it?
Yeah, it depends. 15 to gross. I am talking about after meeting all expenses, but before tax, 15 to 21% before tax. Revenue before tax. Yes.
Okay, got that. Yes. And sir, longer term, what is the vision of our company? Like what level of scale of operations, customers, turnover, profit would we hope for in 5 to 10 years, maybe?
You see, in longer term, what is needed we will do. What is needed in IT we will do. We will keep our market share. We will keep our positioning, and we will our network. As you know, our network is very good pan India. our clients are increasing. Our model is different. Whether market go down or whether it is up, we are positioned for every situation.
Okay, got that. Thank you.
Thank you. We have Dr. D.K. Agarwal from SMC Global Securities. So please go ahead.
Madam, I'm from the management side, and there were certain questions from operative perspective. So I just wanted to clarify about that. Somebody asked that if the market goes down, what would be the profitability? Am I audible in the first place?
Yeah, audible, DK.
Yeah. So first of all, I would like to tell that we have number of strategies. We are doing HFT, we are doing algo trading, and we are doing many strategies where very low latency is required, and some strategies where latency does not match up. Secondly, our arbitrage is a hedge position. We do a lot of vanilla arbitrage and then very limited risk arbitrage, where risk is very minimum and returns are reasonably good. Thirdly, somebody asked what kind of margin you are making. So we are making margin of around 20% on the fund invested. Okay. So if there is any other question, I'm happy to answer those questions.
Thank you. Participants who wishes to ask a question may press star and 1. Anyone who wishes to ask a question may press star and 1 now. As there are no further questions from the participants, I now hand the conference over to Mr. Mahesh Gupta from SMC Global Securities Limited for closing comments.
Yes, myself Mahesh Gupta. Thank you all for participating in this earnings call. I hope we have been able to answer your questions satisfactorily. If you have any other further questions or would like to know more about the company, please reach out to our investor relations managers at Valorum Advisors. Thank you. Stay safe and healthy. Thank you very much to all.
Thank you. On behalf of SMC Global Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.